Hello everyone, welcome back to my YouTube channel. In this video, we'll be talking about the second step involved in recording, which is journalizing. We've already discussed the first step, which is analyze, which includes preparation of accounting equation. In the second step of journalizing, the book of prime entry or the book of original entry, journal, is prepared. Journal is the first book of entry, which is also known as book of prime entry or book of original entry, because all the transactions and entries are recorded in chronological order in the book journal. Journal is also known as general journal, and all the entries are recorded in this book first before being posted to the other books of accounts. Chronological means in the order of their occurrence. Entries are recorded in the book journal according to their occurrence, in the order of their occurrence. Now, for the purpose of understanding journal, we must know the rules of debit and credit, because we must know what happens when there is increase in asset or there is increase in liability, if there is increase in expense, and so on. So these rules have to be learned beforehand in order to understand the journal entries. Let us understand the rules once again. There are 5 types of account: assets, liabilities, revenue, expenses, and shareholders' equity in case of corporations, and capital in case of proprietorship. Increase in assets and increase in expenses are always debited, and for the remaining we will do the opposite. This has to be remembered in each case. Now let's understand how do we prepare journal. This is the format of the journal, in which first of all we write the date or serial number, then particulars, which includes the journal entries, then comes LF. LF is ledger folio. Ledger folio basically tells you about the page number in which that transaction is recorded in ledgers. Then is debit. Debit amount we write here, and then credit amount we write here. Okay, let's assume that these are some of the transactions which have taken place in chronological order. They have been given to you. So now you have to post these transactions in the form of journal entries in this general journal. Okay, these have to be done in a chronological order. That means line wise, as they are given according to date. Now let's start with the very first transaction, which is given to us for a particular corporation. It says furniture purchased on cash rupees 5,000. Now, how do we pass the journal entries? We have to check what is the impact, what is the effect of that transaction on different accounts. So in this transaction, what is the impact? Furniture has been purchased. So the company has got furniture, and what has gone out? It is the cash which has gone out of the corporation. So furniture has increased and cash has decreased. This is the implication, this is the effect of this transaction. Furniture and cash both are assets, right? So when furniture is increased, furniture will be debited. See, increase in asset is debited. Since increase in asset is debited, so we will debit the furniture. Here in this journal entry, we will debit the furniture like this: furniture debit. Okay, by what amount? 5,000. And what has been credited? Cash has been credited. We'll leave some space here and then we'll write to cash. Okay, and we will write this amount on the credit side. Now, why has cash been credited? Because cash has decreased from the company. You have to consider it as a company. You have to consider yourself as a company. You have to consider yourself as a corporation, and accordingly you have to pass the journal entries and analyze the impact of the transaction. So since the asset, that means cash, has reduced, it will be credited here. Cash is reduced, it will be credited. Furniture to cash. This is the journal entry for furniture purchased on cash 5,000. Now, after writing the journal entry, we write a narration. This is called narration. What is a narration? It is basically the explanation of the transaction. The transaction is furniture purchased in cash. So we will write narration as being furniture purchased in brackets, and it is done. This is the complete transaction, a complete journal entry for a particular transaction. Okay. Next is paid salary 3,000. Now, salary has been paid. What is the effect of this transaction? Salary has been paid. Salary is an expense. Salary is an expense. Expense has increased. When expense increases, it is to be debited. So we are sure that salary expense has to be debited. Now, what has been the another implication of it? Paid, that means cash has gone out. Cash is an asset. Cash is an asset. When asset decreases, asset goes out of the organization, it has to be credited. Okay, so what is going to be the journal entry? The entry will be salary expenses debit to cash, since cash has gone out, and the narration will be being salary paid. What is the amount? The amount will be written here. It is 3,000. So we will write the debit amount on the debit side and the credit amount on the credit side. This is whatever the date is given or the serial number is given, you will write it here. And this transaction is also complete. Always remember, you write the debit side first and then you write the credit side. For credit, you do not have to write credited, or but for debit, in some countries it is mandatory to write debit. It is a format to write debit. In other countries it is not a format to write debit, so you have to do it according to the rules of the country. Next is purchased supplies on account. Now, supplies have been purchased on account. We all know that there are two types of transactions: cash transactions and credit transactions. Now, since it is a credit transaction, we will not use the word cash. When credit transaction is there, then either accounts receivables or accounts payable is used, or creditors and debtors are made. So accordingly, you have to pass this journal entry also. Since you have purchased supplies, so supplies is your asset. So supplies have been increased in the organization. As asset has been increased, so you will debit supplies. Okay, but what will you credit? It will not be cash that will be credited. It is on account. That means you become liable to pay in future. You have not paid the money today, you will pay it in future. So it is the accounts payable that is to be credited. Let's start writing it. Third, supplies debit with what amount? With amount 2,000. And what is to be credited? It is the accounts payable, since you are not given the name of the creditor, and the amount is 2,000. Okay, now accounts payable is your liability, right? Accounts payable, you become liable to pay. Anything paid is your expense, anything payable is your liability. Since you are liable to pay it in future, it is your liability, and the liability has increased. Increase in liability is always credited. Increase in liability is to be credited. Therefore, you have written this way on the credit side. Okay, being supplies purchased on account. Yeah, on credit. It could be that also. Okay, now let's do the fourth transaction. Issued common shares 10,000. Now, common shares have been issued. When you issue common shares, what do you get? You get cash. Okay, and common shares is your part of shareholders' equity, or you can say a liability. It's a part of your shareholders' equity. Now, cash has come in. Since cash has been increased in the organization, it will be debited. And common shares is a part of shareholders' equity. If there is increase in common shares, it will be credited. So the simple transaction, simple journal entry will be cash debit With what amount? With amount 10,000 to common shares, since it is your shareholders equity which has been increased, being common shares purchase. This is your transaction number 4. Next is declared and paid dividends rupees 500. Now dividends have same implications as that of assets and expenses. For dividends, increase is to be debited and decrease is to be credited. Now, since dividends have been paid, dividend has been increased, therefore dividends will be debited and cash has gone out because you've paid in cash. Cash is an asset. When cash comes in, it is debited. When cash goes out, it is to be credited. So you will credit cash by that much amount. Okay. Next is performed services on accounts. When you perform services or you pay or you sell goods, okay, either you perform services or you sell goods if you're in an organization. So when you perform services or sell goods, first of all, you are doing it to earn revenue. So what do you get? You get revenue, okay? If you're performing services, you get service revenue. If you are selling goods, you get sales revenue, right? So in this case, it is the service revenue that has been generated. So revenue, when revenue is increased, it is to be credited. So you have credited service revenue, okay? But now in this case, cash has not been received for the services you have performed. It is on account. That means it is accounts receivable. This asset has been created, so this asset will be increased and you will be debiting it. Accounts receivable is created and you are debiting it with that particular amount. And you will write the narration being services performed on account, whatever. Next is paid rent 800. So now you have paid rent. So you will be writing what have you paid? You have paid rent. Cash has reduced and rent expense has been created. So rent expense you can write, or rent you can write, and then you have to debit it with what amount? It is 800 to cash. Cash has gone out 800. Okay. Next is paid creditors of accounts payable due 1200. Now you have paid creditors of accounts payable due 1200. Since you have paid, your cash has gone out and your liability of accounts payable has also reduced. Accounts payable is your liability. When liability is reduced, you will debit it. When liability decreases, you debit it. So you will debit accounts payable now since you have paid them back. So you will debit accounts payable with what amount? You will debit it with 1200 and you will credit cash. Since cash has gone out, you will credit cash with that amount, and then later on you will write the narration. Now next is received cash from customer in payment of accounts 3000. Since you have received cash, you will debit it. You already know that increase in cash, increase in asset is always debited. Okay, now but why are you getting this payment? Why getting this money? Because there was an amount due from the customer. You were supposed to get it from the customer in payment of accounts. That means earlier you made accounts receivable account and now you are getting payment on behalf of that accounts receivable account. So therefore you will be cancelling that accounts receivable by 3000 amount. Okay, so for this case the entry will be cash account debited. You will debit cash because you're getting cash, and you will credit accounts receivable that you already made in respect of this payment. Since your asset has been reduced, you're not no more You will no more be getting money from this accounts receivable, so you will be decreasing this accounts receivable. As accounts receivable is your asset and it is being reduced. Why is it being reduced? Because you are no more entitled to get payment from this account. This account with 3,000 amount has been paid. So therefore, this account is no more able to give you money in future. So this asset has been reduced by 3,000. Okay, so we'll be writing being cash received. Okay. Next is purchased 1 year insurance policy. In this case, your cash is reduced because you've purchased, and 1 year insurance policy is something that you've got. So this is basically prepaid insurance. You have paid for 1 year insurance in advance. It is called prepaid insurance, and prepaid insurance is your asset. Any expense that you're any future expense that you're paying today or that has already been paid is your asset, because you are no more liable to pay it in future. Okay, so its journal entry will be prepaid insurance. Since it is your asset and your asset is increased, you will debit it and you will credit your cash, because another asset of cash is going out of your business. The amount here is 1,500. Okay, so these are all the journal entries which have been passed with respect to these transactions.
This is all for today. See you with the next video on posting and preparation of ledger and trial balance. Till then, test your knowledge by answering the question which is given at the end of this video.